In this video, we'll discuss Dorchester Minerals Limited Partnership. Dorchester is based in Dallas, Texas, and operates in the oil and gas industry. They own a variety of assets, including producing and non-producing properties. Some wells are actively producing oil and gas, while others have potential for future production. Mineral rights. They own underground oil and gas reserves and can either drill themselves or lease the rights to others. Royalties and overriding royalties. Dorchester earns money from oil and gas production without paying extraction costs. Overriding royalties are similar but tied to leases instead of ownership. Net profits. They get a cut of the profits after costs are deducted. Leasehold interests. They lease the rights to drill on land owned by someone else. So essentially, they make money from all sides of the oil and gas business without always having to get their hands dirty. Now, let's look at the numbers. The P/E ratio is 12, which is below the industry average of 14. This makes it undervalued compared to its peers. Earnings have grown by an impressive 18% annually over the past 6 years, except for a brief dip in 2020 due to COVID. Financial health. Their debt-to-equity ratio is just 0.02, which is very low for the industry. The company possesses $56 million in cash, covering their total liabilities 9 times over. All this means is that bankruptcy is almost impossible. Dividends. For the past 43 years, every year dividends have been paid, and over the last 6 years, they've consistently paid out 10%. Free cash flow. The business generated $89.8 million in free cash flow, what is greater than their net income of $78.2 million. That's a sign of a cash-rich business with excellent financial management. Book value and market cap. Their book value is $396 million, while their market cap sits at $1.6 billion. After paying off all debt, they'd still have $1 per share left over. This means that the company's shares are trading above book value, but the share's market price on paper can be reduced by $1. Other key factors. Insider confidence. In 2024, the CEO and CFO invested over $1 million of their own money into the company. That's a strong vote of confidence. Institutional ownership. It's relatively low at 16.42%, and analysts don't actively cover the stock. Share buybacks and issuance. While the company isn't buying back shares, they've also issued shares for acquisitions, increasing the share count by 30% since 2017. Also, let's be real, their name and website aren't exactly exciting, so it's easy to overlook or ignore them. Here's the bottom line. Strong financials. With low debt, growing cash reserves, and free cash flow exceeding net income, Dorchester is rock solid. Consistent dividends. A 10% annual dividend yield is a dream for dividend investors. Insider investment. The CEO and CFO putting their own money in shows they believe in the company's long-term success. Growth potential. With strong earnings growth and a growing cash position, Dorchester is set up for long-term success. What do you think about Dorchester Minerals? Let me know in the comments, and don't forget to like and subscribe.